June 10th, and we are back for another edition of Chart the Markets. And I want to thank our good friends at BYDFi Exchange for helping make this possible. Our friends at FEG Token, which is FEG.io, and SmartDefi.com. And I encourage you to kind of check out those platforms and check out what our friends at SmartDefi.com and FEG.io are doing, because it's basically the tokenization, the commercialization of tokenization is probably what I'm trying to say. And today I want to talk a little bit about those misleading moves in price that are driven by news. And these are things that we encounter each and every day, some days more than others. They could be economic news. It could be any sort of stock or company specific news. It could be related to the vertical that you're trading in, i.e. crypto, commodities. It could be anything. Right? Absolutely anything, from jobs numbers to unemployment, interest rates. The list goes on and on and on and on. And for those that trade futures in any way, shape, or form, you find yourself probably feeling the volatility that happens within those moves. Right? Is it the anticipation of something good? Is it the anticipation of something bad? And do those two things align after the news is out? We really don't know, right? But how do we protect ourselves? Ultimately, that's what we're trying to figure out a way to do, is to protect ourselves. Because that volatility isn't always our friend, right? We are not always right, no matter how hard we try. Sometimes we're wrong. And when we're wrong, we need to be able to have a cushion, right? We need to have something to fall back on. And what is that? Well, that's where your mitigating your risk comes in. It's all about your position sizing. Don't bite off more than you can chew. You don't want to be leveraging a trade that's your whole account. That's not how you're going to live to play another day. You want to back the leverage off. Maybe adjust your time frames. All of these things are tools that you can use. Look at different flows, look at options flows. There's all kinds of things that you can be doing. But when you're looking at your chart, you have to make a decision on, first off, are you going to trade those news-driven days? And if you are, when are you going to trade them? Are you going to trade them before open, after open? Are you going to let the market settle? Are you trying to jump the gun? Because this is where the whipsaw in volatility often comes in, right? And we've seen this time and time and time again. And I'm just kind of switching to a 15-minute chart of ES, which is the contract for the S&P. And there are obviously some very large swings here. Both trend moves, and again, this is a 15-minute chart, so when I say trend moves, I'm talking specifically about the time frame. And then obviously just big, giant candles that just collapse. A little bit of a snapback like we talk about, right, to a reasonable level. Look where it tags at 200 on the 15. Back to the 5 EMA and down it goes. This time it breaks the 200 for a bit. There's all kinds of volatility here. One of the things that's consistent is how price behaves. I was, listening to someone I consider a friend today talking about, this changing world that we live in, and how quickly things go from A to B and from left to right and from upside down to right side up. I remember someone who was in a computer engineering program that told me, 2 years after they were in it, pretty much everything they had learned the 2 years before was obsolete because things changed so quickly. Whether that's true to the to the number or not, but I think we all understand what the point that was being made. But one thing that hasn't changed is how price behaves on a chart. At least not in the time that I've been watching it, which is the better part of 25 years. Do things happen quicker? Absolutely. I don't think anyone's going to deny that price has a tendency to bounce around quicker than ever before, but a lot of that is probably electronically driven, and we understand that. But the dynamics of how it behaves has not changed. So here we are, learning skills of various different sorts that in some respects can be obsolete over time. But the one thing that's strange is that how price reacts on a chart has not changed. In other words, if you take the time to learn it today, it'll be with you tomorrow, and the day after that, and the day after that. You know, I remember people talking about how if they could code, they could write their own ticket. And now all of a sudden those jobs are vulnerable because of technology. And has technology affected the way we trade? Of course it has. But how price behaves is still consistent. And really that's your opportunity. That's how you can manage what looks chaotic, what you see on a chart. Some news driven, some not. I don't like to trade prior to news, because basically you're just rolling the dice that you're going to get what you expect to get. In some cases it might work, in other cases it doesn't. I'd rather wait to have it figure out what it wants to do. And on this 15-minute chart of ES, pointing this out because of these big extremes, right? One of the things that I appreciate about, far too late by the way, using signals is that originally I thought that using signals like we see was lazy. But then it took me many, many years to realize, well, the signals that we're seeing are just based on the methodology that you're trading off of, you dumbass. So why not use them? And that's basically what I do now. They just visually show up on my screen for me in various different cues, particularly what we've scripted. And by enhancing it a little bit, how do we manage this volatility? We have a big move up, and then all of a sudden we have a doji at the top of an uptrend, and our 5 EMA goes from white to red, senses the fade, and then the breakdown begins. And you're trading, what do we talk about trading above the 20, the 50, and the 200 on any time frame? Because everything is fractal. When you get too far away from the 20 and the 50 and the 200, at some point in time, you're going to have to come back and start to tag them. We also talk about how price doesn't like to get too far away from these levels, and when it does, it will come back, which it did, which triggered the breakdown. This stuff has been behaving this way since the day that I started watching it, and has not changed. And that, again, that's your opportunity. Is all you have to do is what you're told, right? That's all we have to do. And just to kind of unclutter this just a touch, we don't even need to know to the fullest extent. All I need to know is this divergence that we show you every week is intact. Now, your job is, if you're reacting to news, you have to ask yourself if you're listening to the right things. And this is the other problem that I think people have with trading in or around news, or maybe just trading news because that's what they do. Some people actually make that a living. I don't prefer it. I just rather follow the chart. Right? The chart told us at the top of a move, even if we waited down here, that you had a nice big move down coming. And it wasn't until in here that we get a confirmation that it looks like things are going the other way, although we had an early entry way down here at 59. and then just nothing but a straight move up. These moves are all manageable, but they're manageable under a couple circumstances. First off, you have to be managing your risk. I know nobody likes to hear about the risk part. Oh, that's not fun. That's not the sexy part of doing this. And actually it is, because if you're not, there is nothing else left. If you're not managing your risk, there is nothing else left. You will not be able to survive to play another day. So yeah, it is the sexy part of what we're doing. There is a reason why I try and identify for you the downside risk on the chart. It's something that I didn't spend enough time doing when I was first learning. I only wanted to look up. I only wanted to see price go up. I have a different point of view now, right? In order to identify what makes you a better trader, well, if you can avoid potholes, right? So avoid the potholes. Just do what you're told, right? Do I believe what I think and what I believe is irrelevant to the chart? Do I believe we should be trading on ES at over 6,000? In my heart of hearts, I don't feel that, but it doesn't matter what I feel or what I think. The chart doesn't care. It's going to do what it's going to do because it is representing what money is doing right now. This is about what money is doing, not what people are saying or what we think. Is all we have to do is follow price on a chart. And sometimes it's frustrating, right? When you hear the market dialogue every single day, right? You'll go into the daily space and it's a regurgitation of basically the same conversation. Life is good, life is bad, market up, market down, sun is out. No, it's not. Big conversation each and every day about what's going on in the world. I don't know. All I know is our methodology told us to go long. So we could have gone long anywhere from 52.93 or into, 53.50, 400. Anywhere in that neighborhood. And price has done nothing but climb ever since. And did all of that conversation matter in between here and there? No, it doesn't. It's all you're doing is following the chart. The market is telling you, through its own form of linguistics, what it's doing. It's telling you, I'm going higher, I'm going higher, I'm going higher. This is just red candles in an uptrend because the trend never broke. Oh, and lo and behold, boom, up we go. And the beat goes on. And what does price want? In the simplest of forms, using only 2 EMAs right now on this chart in a volume profile, the upper value range. You break one level, you'll find the next. And those levels come in various forms. But when price is moving up like this, is all you know, it's looking for another level. And it's not going to stop until it gets there. And the money flow will determine when and where that fades. It's only the money that matters. Everything else is noise. Think about this for one moment if we could. This is the 25th of April. Up until today, which is the 10th of June. Each and every day from the 25th of April to today, people are having, while they're in trades, having this conversation of, oh my God, I don't know what to do. I don't know what to do. Should I sell here? Oh no, this is a red candle. It looks like we're overbought. I better sell. What do you think? How many times have you heard that? Thousands? When in actuality is all you got to do is just hitch your wagon to price and follow it to where it goes. And it will follow a path, and it will end at a landing point that usually involves past price. Current price looks for past, and that's what it's looking for now. And that's why this upper value range is a legitimate target, because it's a representation of past price, where buyers and sellers have shaken hands in the past. And price is lazy. It'll take the path of least resistance. That's why it likes these gaps, or these gaps, or these gaps, or these gaps on the way down. But right now we're dealing with this one. And this gap makes it easier for price to travel through, because again, think of it as a path of least resistance, and it's looking for a concentration of past price, for lack of a better explanation. Call it liquidity, call whatever you want. I don't care, as long as you understand what's going on. And that's what it's looking for. Sometimes it's structural, right? Sometimes you're trying to break structure. That's kind of what we're into now, right? These candles up in here, somewhat of a structural level. You know, you break through that, and that makes this a legitimate target. Again, and it doesn't matter what we think. It's just different forms of analysis. And if we flip to a weekly, which I think right now, spend a little more time on weekly charts, because it will give you a little smoother look and take out a lot of the daily noise that we're looking at. But what do we know about this chart? We had big impulse move down, like crazy impulse move down. And this is a snapback. Look how, you get super oversold like this. This, 1, 2, and 3. Who goes first? Usually the stochastic RSI, that's why it's in this order. The Fisher transform, and then the MACD. This divergence, in combination with the cue that you get when your 5 EMA changes colors from red to white, it's sensing not a fade in this case, now it's sensing acceleration higher. The divergence that you're seeing in your stochastic RSI, also with your Fisher transform, which I know a lot of people don't use, but I love it because it filters noise. Fibs, fractals, and filters. This is an example of one of the filters. It creates a Gaussian channel, filters out noise. And that noise is what throws traders all the time, right? Getting faked out. Here we have the MACD, and the MACD's moving average and signal line are starting to break zero. Well, that's bullish on any time frame. It just is. So what does all this say on the weekly? All of these kind of momentum indicators are confirming what we're seeing in price behavior, making this high a legitimate target, regardless of whether or not we believe it should be there. The only thing that matters is the price on the chart. And what are we looking for when we're up here? What's happening? What are we creating? Right? Because pattern recognition is relevant when it comes to what we do. So if price gets up here, now we've created yet again that phenomenon where we have two equal or nearly equal points in price, creating what many people call that double top. So we would be facing a double top on the weekly chart at all-time highs. Remember this if there's news in and around this area when price gets up to the all-time high, because how it reacts to those levels could be intensified. But potentially, what could we be looking at? Well, move up, move down, move up, move down. Do we take out this previous wave's low? Or do we continue on and just continue to go straight higher? What I'm basically concerned about is, or trying to show you here, is that the M pattern that can form on your chart is really relevant. Always has been to me. W's create winners. M's murder. Right? So we just want to watch up here that we don't create an M pattern. If you want to be long, you want to create a W pattern where you're creating another double bottom down here and you move higher. But we're at 2 equal points in price, and that always makes everybody nervous. The people that didn't sell up here might want to consider doing it up here. Right? Oh darn, I missed this. The next time I get close to it, maybe I'm going to take it. And if that's the case, because we're trying to prepare for the downside risk because it's going to make us better long traders, what does that downside risk look like, and how could we monetize it if we decided to do so? Well, look where the 20 and the 50 are. We know that when we break one level, we'll find the next. So if this fades up here, what will price be drawn to? It will be drawn to these levels, just like it was drawn to these levels here, and here, and here, and here, and here, and so on, and so on, and so on. So in the event of a fade, start looking on the weekly to where's that 20 and the 50? Where's the T line? Where's the 5 EMA? Still bullish trend, yes. But are you trading above the 20, the 50, and the 200 on the weekly chart? Yeah. So we start looking over our shoulder to make sure that we don't get hit by something we didn't see coming, which could be a big sell-off, right? So if you're long, it's great to be long. You're in a great trade. You probably had a great entry, and there's nothing wrong with that. But you just want to be aware that when it's time to cut it loose, that you can cut it loose. And what are we looking for? Why am I showing this 4-hour chart? Well, if we're going to sense something coming, it's probably going to be on the 4-hour or maybe even off the 1-hour. Right? This is how you're looking over your shoulder using fractal analysis, dropping your time frames so that you're not going to get crushed by something you didn't see coming around the corner. And the process and the means by which price behaves on this 1-hour chart is no different than the 4-hour Bitcoin chart. We know this gray area is light trading. We know what these gaps mean anywhere. We're trading even on the 1-hour here above the 20, the 50, and 200. So at some point in time, I'm weary of a little pullback. And where might that come? Well, I don't know. Here's 2 equal points in price. That would be a place it may happen. But you're still fully diverged. Because remember, we have no idea what comes after the current candle that we're in. Right? That's our 1-hour candle. That's all we have to work off of. All we know is that this is still bullish. We also know that current price will look for past, and it will look in this case to take out the previous wave's high. That's why this is the target. And once it does that, it's either going to feel so good about itself that it's going to accelerate and run, or it's going to go, can't believe I made it, I'm going to take a bit of a break. That's it. Really as simple or as complicated as that. But it's money that makes the difference. It's money flow, not speech flow. It's money that moves price. Yeah, maybe a news pops price temporarily, and you see this in the stock market all the time. Report comes out, the stock pops. 2 days later, it's trading 5% lower than the day that earnings came out. That's why we follow money. Because there's some people that may have loaded up on that stock all of a sudden, not realizing that, hey, they were exit liquidity, or it was just well overbought. But this is why you need to be able to read price on a chart. It's critically important if you're in these markets, in any way, shape, or form. Like they should be teaching this in high school. but that'll probably never happen. But let's look at what Bitcoin's done here, because I wanted to show you this daily chart. And again, we have a little bit of a pullback today, nothing super drastic, right? But what do we know? We know that price doesn't like to get too far away from the T line and the 5 EMA. Kind of likes to walk up it like you see here, stay attached to it, and that's a nice clean move higher, right? When it gets parabolic like this, it creates a bit of this gap. This gap likes to get filled. And what would it be looking for? How would that happen? Real simple. Where's the upper value range? So I got, a little bit ahead of my skis, going to pull back where? To an area of comfort where buyers and sellers have shaken hands in the past. And it's going to break down one level and it will be looking for a next. So it's going to be looking for that 5 EMA, the 20 EMA, or the T line in here. Those will be draws for price. This candle does not necessarily mean that the sky's falling. It hasn't indicated that a trend has changed, at least on the daily, or anything of the sort. What it's simply doing is it got a little too hot, and I'm assuming it's going to want to come back and test these levels to the downside, which is a completely appropriate area for it to pull back to. If I drop the time frame on the 4-hour, let's just keep in mind here that this is what we would be looking at. Watching price break out. Now, when you're looking at this candle, this current candle to the right, we often see how, we talk about how in order to figure out what's going on the right side of the chart, we need to look to the left. And this is an example of why. This shows you an area where price has been in the past, both as support and resistance, right? Wick way up here. But what I want to draw your attention to is way back over here on the left-hand side. Every week we talk about how price will find an area to the left of the chart where the T line and or the 5 EMA show up. And those turn out to be areas of support and resistance quite often. And this is one of those cases. And you've got, is all we ever do is, we're trying to line up areas of support resistance within the candles that we see, and this does it quite clean. Right? It's not pin the tail on the donkey. Right? But these are just the little cues that we see all the time. And again, much of this is repetition. The more you see it, the more likely you are to remember. So look to the left of the chart. Look to see where the T line is and or the 5 EMA. You might be surprised at what you see, because price isn't the only things that will show you patterns that you might be able to need, or use rather. And I'm sure we'll come across examples of that before we're done here today. But on this 4-hour chart, again, it doesn't matter what we're looking at or what time frame it is. This is a bullish chart. And even this pullback, look where it's finding support. Right at the T line. So you can understand why the T line is a very relevant tool in the way we analyze a chart. And much of what I learned about the T line, I learned from a gentleman by the name of Stephen Bigelow. Who would say that it has Fibonacci-like properties. And I don't disagree with him. It is a critical point of support and resistance in trend moves especially. So what I would caution here is we have our price moves down, find support at the T line, and then look for a move higher to test this level. That's our upside But that's our upside opportunity, up, down, sideways. Those are the three choices we have. Right? Price pulls back, holds the T line, catches a bid, and challenges the previous wave's high. Option 2, chatters along this range before it figures out what to do, eating up a little bit of this shelf perhaps. Option 3, fail the T line and pull back to the very least the upper value range. That becomes a slippery slope because look how far away you are from the 20. And this is all fractal analysis. This can happen on any time frame. Right? So if we know that current price looks for past, in the event of a breakdown, what are we looking at on this chart that we can use to give us some sort of reasonable probability on where price may go? So if we break down, we've identified the upper value range and we've got this gap in here, which we know price can sink through. This little shelf basically created by the top of this candle, the top of this doji, and then the bottom here. That's what this shelf is created off of, a very small base on the 4 hour. So I wouldn't expect that to last long because the draw down here is to tag the 20, which breaches all of that. The 20 doesn't hold. Hey, you've got the 200 and the 50 right on top of one another at the bottom of a significant gap. Then we've shown week in, week out how price gets into those gaps, either up or down, and moves quickly. That's your downside risk. That's your upside opportunity. Break this level and hopefully you continue to run. Is all we're looking at here. Here you've got, for example, a move higher, a few retracement candles, a big move higher, a few retracement candles. Do you get another move higher that takes out the previous wave's low, or has it exhausted itself and starts to fade? And the only way you're going to see that in advance is by dropping your time frames and by checking on, whether you're overbought and oversold on some of your other indicators, whether or not they're showing you or confirming a trend change. Notice in here you don't have any signals about trend change yet. So there was a little trade down here, sure. Where it ends, we don't know yet. You could catch support and bounce higher, we just don't know. You can only work off the one candle that you're looking at. Everything else is front running. Everything else would be front running. But what makes it effective is that you get good entries. Right? This 4 hour chart, I love these moves when I see this. Stochastic RSI and the Fisher just scraping the bottom of the ocean like this. So oversold after a big impulse move down. That's a snapback. Snapbacks are probably some of the most fun things you'll trade. It's just, how do you know when you're in one, right? Just look for extreme everything, right? And when price starts to break, it's really going to break. And our methodology helps us with that. Right? Just going to blow this up a little bit. We can see this divergence in the stochastic RSI. We can see it in our Fisher transform. We can see the moving average and signal line on the MACD starting to converge. All of that is telling you that there's money coming in, not money going out. So we have those three things that are the wind at our back. Our 5 EMA on our script changes color, helping us determine that there's inflows, not outflows. And then look what happens, right? There's our signal, and price goes higher. Breaks through all of this, what should have been resistance. And I guess essentially it was. You had a big green candle that broke through and then a retracement, but the trend never changed. You got your signal, and even though you had a big pullback on the next candle, did not break trend. So you would be very comfortable still, because we understand how our system works, that as long as that divergence is intact, you can stay in the trade. Did you get a signal to sell anywhere yet? No. That's all we're doing is following, right? All we're doing is following. It's some of the parameters that are working in the background are keeping us out of the fake out signals so that we can filter as much of that nonsense as possible so that we can just take high probability trades. So by tweaking this thing a little bit, been able to find a way to help get even earlier entries, but they're early enough that if they don't succeed, there's plenty of time to take profits and exit them. But what we're doing here is just following. And for me to this day, that's the hardest part about it. Because I'm impatient, like everybody else. I want to see money in play. I don't want to see it sitting on the side. I don't want to wait. I hate waiting for the right setup. It frustrates me. The list goes on and on and on. I'm human too. But that's why I rely on this more and more all the time. Because I'm human. And I will, at some point in time, get sucked into the tornado that everyone else is in if I don't find a disciplined way to manage all the irrationality that comes out in a news-driven environment. Like, the market's wild enough without that. Throw that into the mix and it's blender time. And that's not helpful to your trading. So that's what having a system, regardless of what it is, but some sort of a structured methodology that you can use, that you can demonstrate, that works to the upside and mitigates risk. If you can do that and follow whatever that is, you should be fine. But it's the front running that will always be problematic. And I know it's problematic because you guys tell me it is. Because that's, we talk about it off these streams too, right? And that's what happens is the front running. You get excited and then you're like, oh, I think I know where this is going. And for some reason, you can only see that outcome. You put your money in play and all of a sudden it reverses. And it's only after it reverses you go, oh my gosh, how did I not see that? I didn't realize, or maybe you're so overbought. Whatever. You could be a million things. But it only happens after you've made the trade. That's because we're spinning a little bit and maybe a little undisciplined. If I'm trading a signal-based methodology, which is basically the methodology that I've refined over time as an example that I just put signals to, right? To make it easier to follow, well, I take away a lot of the risk. I reduce the amount of mistakes I make. And I'm telling you that this happens to me because I want you to understand that it happens to everyone. Everyone, not just you, including me. But this is how I was able to address it, was by working off just a simple, basic signal system. This is the same chart, Bitcoin, 15 minutes. What happens when you trade above certain levels? Right? This is the 15 minute of what we've been looking at. You're well above the 20, the 50, and the 200. At some point in time, you're going to come back and tag it. Price never goes straight up and it never goes straight down. Beautiful impulse move up on this 15 minute. I think pretty much anybody would have sold that top, right? Especially knowing, because this is what it would have looked like. When your next candle is that, you can really identify that gappy area that needs to be filled, which is going to lead to tests of what is support. And if that support doesn't hold, then we breach. Price was always going to come back at some point in time to tag the 20 because it was never going to go up forever and forget that the 20-day moving average existed. That's not how it works. That's not how it works. And this is what's disappointing sometimes, is that you get in great entries and you ride them all the way up to the top, and then what happens is that it was such a tremendous move, it just can't be over. It just can't be over. There's no way. Like, it's got a little more in it. It just has to. Let me get to X% just to make it a round number, and then I'll cut it. Or something to that effect. When the chart tells you that you've topped out, what's happening here? Consolidation. Right now, are you going to sit around and wait, I don't know how many hours, 3 or 4 hours for this to figure itself out? No. That's obvious top at an all-time high area. Yeah. Probably wants to take a break. Then the market tells you it's taking a break. There's your entry signal confirmation. You break the 20, and then here we go. All that divergence kicks in, and until the chart tells you that you're changing direction, it's just until here. Think of what was going on in people's heads as they were watching this chart, up, down, up, down, up, down, right? It's manic. And it's manic when you think about it constantly in the terms of, well, I have to make a decision. Well, no, you don't necessarily. This divergence is telling you you're fine. I'm taking the candles off to kind of exaggerate, to make a point. The candles will make us crazy sometimes. As much as we need them and love them, they can make us nuts. And if you're trading a trend, this is the meat of the sandwich, right? This is the meat of the sandwich, right in here. That's the good stuff. So what if you don't eat your crusts? Who cares, right? Don't worry about it. We sometimes get stuck in the thick of thin things, right? We can't make decisions because we're so focused on stuff that's not important. Sometimes it's that news, right? Quite often it's that news. Quite often it's the things that we surround ourselves with, or the things that we listen to, or the news that we absorb. But it's just noise. At the end of the day, if it's not price, it's just noise. 15-minute Bitcoin chart, any trader in the world would look at this chart, the way what they see right here, right now, would be short down to here. Because they understand what this gap means. You don't have to know when you're looking at this chart right now at 156.19 what the 10-year is doing. It's not important. The only thing that matters is that price is into the gap, and chances are it's going to want to find this lower range. And if it doesn't find that lower range and wants to move higher, we're going to be told that too. It's the information that you can apply to your chart analysis today, that you can use to trade today, that will make you money today. Am I interested in what the 10-year is going to do, and do I have an opinion on that, and oil and the stock market and everything else? Yeah, sure. But does it matter in the here and now of what I'm trading on this time frame? Absolutely not. Is all that matters is the language of the market, a real-time representation of what money is doing and not what people are saying. That is the BS that you need to stay out of. And if you spend more time blocking out the noise, the news, the opinions, and spend that time doing very simple chart analysis, you're probably going to find that you're a more effective trader. And it's not disrespecting all that other stuff. It's not. But all of that other stuff isn't necessarily relevant to price on the chart in the here and now. Case in point. Whoops. I'm just going to take the volume profile off because it's sometimes not well received on certain things. There we go. This is a 1 hour chart I'm going to switch to of oil. Nice
So we write this.
moves
Oh,
up and
sorry.
down. Sorry, no, it's okay, Mike. Just nice moves up and down, but we have to respect what appears to be a top, right?
Mm.
This is a 15-minute, maybe a little better view. What does this tell you? Like when you see
Got reversed.
candles like this, yeah, like that is telling you that, hey, not only do you get the candle, but we get a change now in our shortest running EMA. It's picking up that fade. There's your next candle. This is why I think the little tweak here is kind of helpful, because it does that from time to time, give you a little heads up that maybe something's coming. And impulse move down. What do? Do we snap back up? No, we go sideways back to these levels where everyone else is going, oh, maybe this is the reversal candle. No, people in here are going, I don't think so. The downtrend's still intact because we can literally see it with our own two eyes. And there you go. So here we are with another impulse candle, and what did we do? Thank you, WTI, for showing the group this yet again. Here's your move higher, you fade, and you take out the previous wave's low. What do you think it's looking for now? This one, on this time frame. This is just the same simple tactics and strategies that we use every week on every time frame on every asset that show themselves over and over and over again to be effective. You do not need to be a PhD mathematician to do this. You do not need a finance degree to do this. You just have to understand how the effects of the flows of money represent themselves on your chart, because that is the language of the market. What money's doing, not what people are saying. And yet here we are in real time yet again, showing you exactly what we try and teach week in, week out. Right, literally before our eyes. Now, is all we're running right now are two simple things. Let's take a look at some of our other momentum indicators to see what we're told. Let's look up here. So there's that last green candle. Stochastic RSI goes first. Right? Okay. What do I love about the Fisher transform? Is it doesn't BS me very often. It gives me nice clear signals that show up in a predictable fashion. And the ones I really like are the ones that are overbought and oversold. The ones at the tops and the ones at the bottom. So that's number 2. And then the third one that rolls is the MACD. Right? And there we go. Do they always go in that order? Not always, but pretty darn close. This happens to be oil. It could have been Bitcoin. It could be Nvidia or Apple or Roblox or anything. Doesn't matter. You could easily erase that symbol and put something else in there and it would be the same thing. The chart is telling you what it's going to do. The only question is, do you have the ability to listen to it? Do you have the ability to do what you're told and follow along? Just follow the bouncing ball. That's all you gotta do. The chart is telling us something that we can't necessarily articulate what it is. Now we're showing a sell signal on this 1 hour oil chart. So, but the chart's telling us. Do I know why price is dropping on oil right now? No, I don't know why. Nor do I care. Do not care. All I know is that this is happening at a structural level. So, where will price find resistance? Where will price be drawn to? Where it's been before. Can you see that in there? It's picking up those wicks, and this wick to the penny. Let's move back. Yeah, right through here too, if we want to get really forensic. So this is happening at a structural level. Nothing goes straight up or nothing goes straight down. Maybe this move is exhausted and it's gonna just take a little bit of a pause, come back to the T line or the 5 EMA, similar to what happened here, but not break trend. That's possible. Completely possible. And then the beat goes on and the trend doesn't change. You don't even get a sell signal on the daily. That could be. Why do we use multiple time frame analysis? Because we need to understand what's going on within the whole market. So think of the monthly candle as your largest nesting doll. You remember those things? Then you open up the one and another one shows up. It's just a little bit smaller. That would be your weekly chart. And then the daily and so on and so on. There's a lot going on within one daily candle that we might not appreciate when we look at that candle all by itself. But when we start to peel the onion back, and in this case we're peeling it back to the 4 hour, we're getting a bearish engulfing candle right here. And those bearish engulfing candles are often signs of reversals. And this is just one element, and this candle still has an hour to go, so it could look totally different by the time this next hour rolls by. But a bearish engulfing candle at the top of an uptrend is quite often a sign that maybe it's time to take a rest. And we know this. We know this is kind of the 101 first day stuff. What we can add to that analysis is, our T line. Are we still holding the T line? So far we are. That's a good thing. Yes, you can probably see that the 5 EMA is flattening out and it's showing some red, which is obviously sensing this fade. But it doesn't mean the world, the sky's falling. We have to look at each candle independently because we don't know what's coming next with any reasonable certainty aside from what we can pick up from the chart. So this divergence on the stochastic RSI is a sign that, hey, maybe this is a rollover. We'll see on the next candle or so if we get the same on the Fisher, because that's how it'll go. Do you short this candle? Well, you don't have a short signal yet, but it doesn't mean that it's not the top of the wave or the top of that trend. So maybe it's just a trade, right? Maybe it's just a trade, and then somewhere in here is the 20, which it will probably want to look for. But it is the flow of money that's going to determine where price is going. Simple. And if you can follow that with some reasonable certainty, you'll probably be okay. This move was getting a little hot. You can see you're a little far away from the areas that you like to walk up. And, to see it fade a little bit at a structural level is not a tremendous surprise. And we know where price may want to go on the way down. Level by level. Break one level, find the next. Simple as that. What am I looking for here?
Because I just looked at that, and on the weekly, it looks like that top has literally hit like a
Mm-hmm.
resistance point. Well,
Yeah.
it's a support level. Now it's acting as resistance. So that's sort of like a confluent. Like when
Mm-hmm.
um you do your top down analysis, you're like, right, cool.
Yeah.
We were in an uptrend, we are in a downtrend, we broke support level, we've retested it, now it's become resistance. So yeah,
No, that's basically the analogy that you're going through in your head, right? Um,
yeah.
what I wanted to show you guys here. So this is the weekly SPY chart, which is basically the S&P 500, and this is the chart that we were talking about. That hey, just around the corner could be a test of an all-time high, which could potentially double top the chart. Right. So the other chart, you guys remember I tell you I watch three things with pretty much every day. Oil's one, the 10-year Treasury's the other one, and the U.S. dollar or DXY. If we look at the 10-year, and the 10-year has been trending higher. Like you can see, it's in an uptrend. Yeah, we have a red candle today, but it hasn't broken trend. The trend is still intact. But this level up here of roughly 5%, if we take out, let's say we do continue to move higher, and we take out this wave, or this high rather, then the next one is this one at 5%. Well, what's going to happen when traders get to the point where they realize the 10-year in the markets are at, well, the markets would be at highs, period, and the 10-year would be testing previous waves highs as well. So we have a market index that's ready to test all-time highs, and then we have the 10-year Treasury, which you know is still trending higher on the weekly. That could also be in the same neighborhood. So this is why I look at these types of things, because I'm in my head trying to get an understanding of what the environment is going to be like, or potentially like, moving forward. Right? So although we're bullish right now and price has been moving higher in the markets, it's also been moving higher on the Treasury. And starting to wonder at this point, what might happen if they get to the, and I don't want to live in hypothetical Bill, that's not what we do, but certainly thinking out loud is that you could have the markets at all-time highs and the 10-year in and around 5%. And that could be an interesting dynamic, right? That could change the bullish trade quickly, right? And this is why you kind of, I watch these things, is so that I might just get a little bit of a heads up that something's changing. The chart will ultimately tell us, and the longer the time frame, the smoother that's going to look. But the chart will ultimately tell you. But I'm often asked why I look at those things and why I look at certain things every day, and that's kind of the reason. And I don't chart 100 assets all the time, right? I'm only charting a handful of things that are relevant to the environment that we trade in, and then I will chart a handful of things that I'm interested in the verticals that I want to trade in. But I'm never looking at 10 or 20 or 30 symbols trying to analyze them all. I'll have a very small group of things that I like to trade on a regular basis, and I'd like to think I know them well. That also helps me filter out some of the noise that we get on the charts. When you're familiar with the charts, you kind of go, "Hey, that's weird. That's you'll see it. You will see it." This is Apple's weekly. And sometimes we forget, we're in the thick of thin things, right? We can't see the forest for the trees. We don't really know what this world's going to bring from one moment to the next. But when I look at this Apple chart, all I know is that all of this crazy trading, these big red and green candles on this weekly, what they have not done is they have not changed the trend. Like they just haven't. They have not changed the trend. So even with, the upward price movement, the trend on Apple hasn't changed. And remember, this is the 20-day moving average on the weekly, and it's the first time that it will be visited. And those first attempts typically fail. If this was price moving down, the first touch would probably bounce. There's a higher probability of those, the first touches. So although, everyone's, or at least a lot of people that I'm around, so I get a little more excited about Apple, I'm not. Not until it breaks trend. This is just a snap back up. That's all this was. That's all this was, a snap back up. And it's important that you're able to recognize these things for what they are, so that you don't get BS'd by market commentary or all these other semantics. Reading price on the chart is the most valuable tool you'll have. It is not turning your computer on and off or jumping in and off of a space. This is a snap back up, that's all it is. Impulse move down, tag the T line, sideways since. The trend has not changed. And, to be honest, I have to start to be really worried that this move goes sideways. Time and price come together, it meets the 20, hits it, and reject it. And we'll remember we had this conversation. That's going to bring you, if this rolls, take out the previous wave's low, that brings you right back down to 176 again. So that's the risk on the chart. The upside opportunities, price pops, and you hit the 20. And hope for a breakout and the beat goes on. But how will you manage it regardless of whether it's up or down? You'll know because price is telling you what the hell's going on. Long me, short me. Pretty simple stuff. We're trying to take a lot of the thinking out of it for you, because that's where the mania comes in. What do our other indicators tell us? Is that, hey, there might be a little bit of gas in this tank. Maybe we do get a move up. We test the 20. And it's somewhat of a structural level too, right? It's all in line with these tops, this bottom, and the tops and bottoms through here. So it's a very, very reasonable point for it to test. But keep in mind, it's not just a major moving average. There's some structure in here too. So it makes that test that much more interesting. But the chart will guide us if we let it. And the if we let it part is probably the operative part of that statement. This is Solana. I know we have friends that like to trade Solana. We're having a little bit of a softer day today. Why? First attempts typically find resistance or fail. First attempts on the way up, support or bounce. I'm not making this shit up. We're doing this in real time. Okay. Doesn't matter what we look at. We're going to see the same things. This was the resistance that needed to be dealt with on the daily. And everything that's going on those smaller time frames are just fractal, right? We just have to wait and see. Is this just, a red candle? We've seen this before. You get an entry signal and all this on a red candle, that's fine. Happens all the time, and then boom, price often takes off. Is all we know is, if you're in down here, you're lucky, but you automatically would know that the 20 is resistance. And that allows you to manage this trade, whether you're using it on a short or long time frame. Well, just as an example, let's just run, this level is what? 162. So if you wanted to drop your time frame, that on the daily, that 162 is the 20 MA. That's what we know. So it doesn't matter what time frame you want to look at or trade, you can mark out that area, right? You know that was an area that where you're going to find some resistance, and you did. And on your 1 hour, this is like, you see this all the time, right? Those two equal tops after an up move and it starts to fade. So that, you know, there's lots of opportunity to see that whether you're trading the 15-minute, the 1 hour, the 4 hour, it was all there, right? It was all there for you to see on various different time frames so that you can confirm that you're doing the right thing. Here's our double top scenario, right? I wish I would have got out over here. Oh, here's another chance. I'll take it. Whew, price sells off. At the very least, that happens more often than not. Does it turn into a massive capitulation? No, not always. But we know it happens. That's why we pay attention to it. We just now have a better way to manage the trade. So if you did go short at that second top, whether you sensed the fade on the 5 or you took the signal, now that you're in the trade, now what do? Well, there's your impulse down, and here's another snapback. How do we know it's a snapback? It simply hits one of these two levels and fades off. We've gone sideways since. But the trend down has not broken. And that's important, because we'll often see that until this trend breaks, yeah, it looks chattery. Oh, this looks like a bottom. It's consolidation. It's going to move higher. Well, how do you know that? You don't know that. But you know what I said? Oh, it's consolidation. It's going to move higher because that's your bias. Make sense? Chart's telling you you're in a downtrend. Your bias is telling that you want price to go higher. So yes, you want this to be consolidation. And yes, you want the break out of the consolidation to be a move higher. But you don't have a confirmation of that yet. And this is when you try and cheat that sometimes we get burned. The chart will guide you. Let it do its thing and be patient enough for it to tell you, to confirm for you. Because the moment that you try and cheat, that's when you get stung, right? That's when you look back 10 minutes later after you've made the trade and go, oh my gosh, how did I not see that on the shorter time frame? Right? Something to that effect. Because your bias gets in the way. Let the chart be your bias. The chart's not wrong. It might be confused sometimes. It might be a little angry or a little bored, but it's not wrong. The only time we think it's wrong is when we try and front run it, believing that we were right because that's what our bias told us. When in actual fact, we shouldn't have been thinking about any of that nonsense at all. We should have been focusing on what the chart's telling us. Any other questions? Anyone? Anyone? Nice to see you in here, Eduardo.
Happy to be here. I missed my session last week, but
Eduardo, for those that don't know, so 5 years ago when I met this crew, Eduardo was probably one of the first people that I met, and has been kind of a good friend and a believer in what we do ever since. So he's a real good guy. So.
One thing I can say, Blunt, is I was happy to hear Sarah ask me why I wasn't in the session yesterday, last Thursday, which I was traveling and wasn't able to attend. But I hope she's infected enough where she's following and learning, which is so important.
So for those that didn't hear or read between the lines, Eduardo's wife actually said, "Why are you not in the stream?" When most of our wives are like, "Why are you in front of your computer all the time?" so good for you. You're good, and you're good.
I probably created a monster.
Yeah, well, that's okay. You know what? It's great that you guys can do it together.
Yeah. We're making progress, and she's making progress. And again, thanks to your method and your knowledge.
Well, listen, I'm happy to help. This is so. This is the thing that I really enjoy trading. It's one of the handful of cryptos that I'll trade as an example. It's called ETHFi. I missed this move in all honesty, so I'm showing it to you with a little bit of disappointment, but the chart doesn't lie, right? Like nice, simple moves that are kind of trapped, range bound. Nothing breaking out, nothing breaking down to any significant degree, although they're all tradable. But these are the ones we love. We just don't know when we're going to get one. So early signal, right? Because your 5 EMA goes from red to white, sensing the money coming in, and then price pops. This is what's exciting about when we do this. Again, it's that candle that explodes when we least expect it, and it just keeps going. And I know that throughout this move up, there will be people trying to short this because on the time frame they're on, it's parabolic. Like if you're on a shorter time frame, even the 15-minute, it's going to look parabolic, and you're thinking, oh, every little wick that you see is a top. Well, you have to get yourself on another time frame. In this case, the hour is perfect, but it shows you that there was really no opportunity to short this thing. And you don't have to be, any sort of technical wizard to understand that as long as price is riding up these levels like this, and the divergence between these two stay intact, that you're in a bullish trend. Like half our battle is determining trend. Well, here we are. Now that you're in it, we've given you a tool to manage it. Like everybody wants to get in at the right time. Whether it's down here or whether it's on this candle is really irrelevant. Again, think of it as a sandwich, right? Like all of this is your meat. This is just the insurance that you're paying, right? That's all. But now that you've got good entries, this is a perfect example of how you use this methodology to ride price. This is a guide. Just follow the yellow brick friggin' road, right? Just follow it. It will take you to where you need to go. Just follow. We know that when we're in, so all this gray up here we know is light trading. We know these gaps on the way down are opportunity for us. We know this consolidation will present somewhat of a shelf, right? But this is what really she'll be looking for, the upper value range, if it breaks down. What do we see on these first moves down? And this is why I always like to throw up the 20, because if we're going to meet it, here it is. And I want to know, and so do you, I want to know where the 20 is on this time frame, because it's going to supply me with support to give me a continuation off the 20. So essentially you have your big move up, slight retracement, big move up, retracement, gets support at the 20, first touch bounce, moves higher, takes out this waves high, and then the beat moves on. That's the upside opportunity here. What is the likelihood of that happening? Well, we start looking at our other time frames. What's going on the 4 hour? What's going to go on the daily? And even the 15-minute, right? What do we see on the 4 hour? Although there's 2.5 hours left on the candle, so it's not exactly a good representation, but it's finding support on the 4 hour at the 5 EMA. That's a good thing, right? If you're bullish, that's a good thing. You want it to hold that. If I stretch it to the 12, what are we looking at? Some people believe the 12 hours is the true daily in crypto because it trades 24/7. Well, downside support. So we're picking up support at the 5 on the 4 hour. A little ways to go on the 12. suggesting that this candle will be drawn to this level at 127.42. Let's back up to the 4 hour. What's 127.42? 127. There it is here. It's a structural level. It's cutting these tops and bottoms, and all the bottoms in here. This is a bit of a mess, but that's what it is. So it's fading actually faster than we think. And here's a gap, right? So we have that gap. We know what happens when price gets in the gap, and lo and behold, you have another level of support at the T line, which is really the important one, which sits right on the bottom of the shelf. This is why we use, or I like to use, the volume profile, because you can trade in and out of those gaps in a very predictable way. I think that's the key, is it's very predictable. Just want to back to the 15 for a moment, just because I want to see where these gaps. Okay, so we've already broken the 20 on the 15 minute, and we've fallen into this gap. Probably won't see any love until we get down here, right? And when we look to the left, what do we have? A bench of past price, place where buyers and sellers have shaken hands in the past, and a place that price may consider taking a rest on. That would be what you would hope for if you want to catch this. We throw the 50 on really quick, and what do we see? We've broken it. So we've broken the 20, failed this level, we found the next, which is the 50, fail that level. Wow. That's the 100 MA, by the way. I wanted to flip it up there because I had a feeling it was going to catch this support, which it does. So I actually think this is a pretty legitimate target through here on this 15 minute at 129, and then way down here is the 200 at 122.8. And that 200 is in line with this bench of past price. And it sits at the bottom of the volume gap. Like, this is pretty simple stuff to follow along. And as all you're doing is following price, right? You're just literally watching the market talk to you and listening to the market talk to you in real time. Right? That's really all we're doing. When we look at the daily chart of this thing, where do we find resistance? At the 200 MA. Right? This is identified as a structural level. That's why this line's here, just in case you're wondering. Right? So here we are. Is this the first test of the 200 since you broke it? Yes. So you're getting a little bit of resistance here. And you shouldn't have been surprised, not that many of you probably even trade this thing, but when you see all these tests of a major moving average like this and you can't get anything to stick above it, at some point in time, it usually gets gassed out and fails hard and then takes another run, right? David Elliott used to describe this as the flowers and chocolate. You know, you show up at the door, you ask her out, she says no, you go home and you come back with the flowers and chocolate and you try again. And that's really what's going on here. But you had to anticipate on the daily, because you do multiple time frame analysis, that you were going to get some sort of resistance or the potential of it happening at the 200. Right? There's a handful of rules that we just kind of apply time and time and time again to help us get to where we have to go. And you know what? They don't really fail us. Right? Oh, look what we have here. So let me take the volume profile off because some of the commodities don't like it. So I flicked on the 100-day moving average, right, on that other chart to try and see what maybe was in there, and we found it, Well, guess what? Here's the daily oil chart. And lo and behold, what does price wick and run away from? 100 MA. Almost pinned the tail on the donkey. This kind of reminds me of this candle right here on the weekly. This was everyone getting really excited on the weekly chart. This is a month plus, right, of positive price action. It kind of broke somewhat of a structural level, certainly broke the 50, but yet look at Doji wicks that major moving average, and then we go back to our daily chart, and this thing looks and smells very similar, except on the daily. What does it mean? I don't know. Could mean nothing, right? Could just be temporary pause, could just be a little pullback to the 5 EMA, and then the beat goes on and price moves higher, and this is just a second and third attempt that's required to move through here. We just don't know. But we can't be surprised. Is this the first time that price has seen it? Yes. Did it fail? It's looking that way. Was this the first time that price saw the 20? Did it fail? Yes. Was this the first time that price saw the 50? Yes. Did it fail? There's a much higher probability of it failing than going through. Does it happen? All the time. But more often than not, they find resistance or fail. On the way down, on the way up, if price is pulling back, they'll catch some support or bounce. And when they bounce, they look for the next high or the previous wave's high, and when they fail, they look for the previous wave's low. This 6166 number that everybody laughed about 18 months, 20 months ago, look at the gravity that it has for price. Do you think that all of a sudden price just decided to sit here in this area because it thinks it's maybe just a cool place to hang out? No, not at all. There's a reason it's there, because it's been there before. Here, 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 here. Come on, it's not that hard. Price doesn't lie. Price doesn't have an opinion. The price that you see on the chart is the opinion of the people that are spending their money. That's what's important. That's it. In understanding what's going on these charts when we see them. Anybody who knows me knows that I'm not an oil bull right now. And I have not been since up here. Telling you that price was going to go back here. Not because I had a crystal ball and I spent all my hours polishing it. It's because price behaves a particular way. The market was telling me that if this event was to continue, this is probably where I'm going to hang out. Somewhere back here, where I've been before. How do you know where price may go in the future? You look to the left of the damn chart. Current price revisits past, and you have no idea, if you're only looking at the right side of the chart, what the hell the past price looks like. Look to the left. It'll show you. It'll show you. There's a lot of heavy lifting here to do before price moves higher. And look, tomorrow or next week rather, we could come back, or Thursday, and we could be sitting here at $70. That's all possible. We have no idea what comes after this candle. We just don't. We can only go off of what we're looking at any given time. Is this a bullish chart? Yes. Is it a little hot? Yeah. But it's still a bullish chart, even if I'm bearish the commodity itself. That can happen. You can be there. There's stocks in the sector that are performing really well right now. So is there a divergence between the core commodity and some of the stocks within the vertical? Yeah. Our friend David Nikoski was talking about it today. He's the kind of guy that follows that stuff intimately, and will pick it up probably before anybody else will even think about it, because he knows how to read a chart. The same opportunity everybody else has. And you get to put that knowledge into action for the rest of your life. From the comfort of your own home. Any questions, guys, quickly, or any symbols that you want me to look at?
So with oil, speaking earlier, I saw it as well with US 100. So like you say, like past price likes to visit, like I can't articulate the way that you put
Yeah,
it, but
just current price looks for past.
that's it. Current price looks for past. So is it fair to say, because I see like sometimes whenever there's like a gap forming within the market. So for example, on on Nasdaq, oh sorry, US 100, depending on how it shows on your thing. There's a gap that formed between 2000, wait,
Oops.
yeah, 20115 and 20293. So would that be like because at the moment it's still a bullish market.
Yeah, like you
But
can
from what I'm,
have.
yeah,
Let's get the 200 up here.
yeah.
So what time frame are you on?
So at the moment I'm just on the 4 hour.
Okay. So you're on the
Um,
4 hour. All right.
yeah, we're trading above the 21, the 50 and the 200.
Okay. Yeah. So
Um,
the question is, where are you going from here?
yeah, pretty much. I mean, for me, like what I've come to see like in the past is for example, there was with gold, I noticed like there was it was wasn't last week. I didn't trade last week, it was the week before. I noticed a gap in gold, and price came back to fill that gap, even though it was going up.
Mm-hmm.
So I'm seeing the same. I've noticed it before in the past with when I've like looked in the past of like price. Whenever there's a gap, price likes to fill
To
it.
fill it, yeah.
Yeah, so that's what I'm just thinking like right now, like based on what's currently happening. Um, my bias, like my thought process right now is I think we've sort of hit like a nice high. Like we've lost momentum sort of in the on the bull run, so I think we might be pulling back to fill that gap to then continue going back up.
So one of the things, so I know you had mentioned that you're working off the 4 hour, which I get. But one of the
Yeah,
things I will do is I will try and look for price where it's getting some, where it's testing a major moving average as an example, right? So
yeah,
here's the NAS 100. Obviously here's your pullback. I want to know what happens here on the 15 minute, right? If I fail the 20 on the 15 minute, chances are I'm going to look for this, right? As the
mm,
day progresses, which would mean that maybe I fade, right? So I really want to see what happens here on the 15 minute. This could kick off maybe a sell wave, right? For the balance of the afternoon or for a couple hours. You just don't know. But I
yeah,
think if it does break the 20, your 4 hours starts to, basically that would be, it's going to test the T line, right?
mm,
If it breaks the 20, what's the 20 at? I mean, this is the kind of stuff I'll do every day. So 21,851, we go back to the 4 hour, 21,850, so 21,750 is the 20.
21,750.
So there's the T line. What did I, yeah, It's basically going to come back to test the T line if on the 15-minute it
It breaks.
yeah.
Cool.
So this is why the multi-time frame analysis is really important. When I start talking about, I don't want you to get hit by something you didn't see coming, this is how you mitigate that risk. Like you can be you're in a great trade. You want to make sure that, again, the goal is to monetize the chart. You've made money. You want to make sure that you keep as much of it as you possibly can. And if you see a giant reversal on a shorter time frame, and when I say shorter, I don't mean the 1 minute or even the 5 minute, on a meaningful time frame, which in this case intraday could be the 15. Right? And this is just a constant thing, right? Of longer time frames, shorter time frames. Is the trend that I'm in still solid on those longer time frames? If it is, great. And if you're ahead of the trade, you're going to be able to identify if there is a pullback. Well, is it a mild pullback that you can absorb that's going to find support and continue to move? For example, is it just a red candle and a further uptrend? Right? Once you're in the driver's seat with a good entry, it's a heck of a lot easier to make those decisions. A heck of a lot easier to make those decisions. So there's our 15-minute oil chart.
Yeah, I'm currently in that trade as well in oil. I just saw the opportunity and I was like, you know what? Because I had it marked up. I completely forgot about it, but it is why you need to come into these sessions because it reminds you, like, yo, man.
Yeah. Well, and I always feel like I need to apologize because so much of this stuff is repetitive, but it's the repetitive. It's seeing it time and time and time again that will make your trading instinctive and reactive. You'll know, hey, when I see this, I know what's happening. There's no point in hoping for something different. This is going to be my reality, so I should either get in or cut the trade or whatever the scenario is. But this oil 1 hour chart, I like to find price action off the 50, in and around the 50, and I will search for that. So, here's your breakout of the 50. I love breakouts off the 50-day moving average. Most people that know me know that. This will be a test on the 1 hour of the 50 at 65.01, basically $65. So first attempts, right? This would be a pullback and it would be a first touch of the 50. There's a stronger probability that it does find support. If it doesn't, and it breaks it, it doesn't mean that your methodology is all shot to you-know-what. That's not what it means. The message is that if it doesn't find support, let's just say that, on the next candle in the next 13 minutes, that it splits the 50 in half or something to that effect. If it starts doing that, the message is very different. You have a bigger problem. Don't look at it as, methodology invalidated. No, that's not what it is at all. If you get a candle that splits that average, especially on a first attempt, like it's not even there, that's the market telling you that you probably better buckle up because there's going to be more of it. And it's just, through this constant doing these sessions and through repetition and your own learn by doing, it'll literally become instinctive.
So when you say split, what do you mean? Like...
So when a candle like this, like when they just split the average, like if this downtrend continues and the next candle that we get in 12 minutes doesn't get any support here at all, for example, and it just splits it in half, right?
Oh.
And that would be a bigger sign that, hey, maybe there's a bigger sell-off coming.
Yeah. Oh, okay, I'm with you.
You see what I mean?
So,
yeah. Like in here, like in here. Like this kind of stuff.
Yeah.
Right? Like those are meaningful moves to the downside. And the same applies to the upside. But, look. I'm not making this stuff up, right? These are I just call these like 20-day continuations, and I just mean that you're getting a continuation of your trend off the 20-day moving average. That's all that means. So this move higher, look at this wick at the top of this candle on the 1 hour, right? This wick, what does that represent? That represents selling pressure down. Doesn't matter the time frame you're on, but it's selling pressure down. So here we are at the top of a pretty big move higher, and we're getting this candle with this big wick at the top, and our shorter term average on this time frame is sensing a fade. No idea that candle was coming, but all we can work off is this looks like it has the potential to be a reversal candle at the top of this trend. That big wick on that doji short term showing you that it's starting to fade, and the next candle splits the 20-day in half, like it's not there. And what do you think we're looking for? Probably the 50. Fill one level, find the next. But do you notice what happened? So here's your move higher, and because we failed, we take out the previous wave's low, and we just do this time and time and time again. There's no crystal ball, there's no magic. It is literally just the language of the market. Market telling us what it's going to do. It's going to give us real simple cues that we can use to determine whether or not we can get on the right side of something and stay on the right side of something. You know, if you're concerned about the choppiness in one time frame, flip to another longer time frame, which will take out some of that noise. Not by much, mind you, but it did. Interesting here, this 4 hour candle, remember when it was just a bearish engulfing candle? Well, now it's a lot more than that. And what's it looking for? Current price is looking for past. So that's where's that past price going to be? Well, we see this bench of past price on this time frame at a glance, which is in alignment with the 20-day moving average. The 20-day moving average, or any average, is a representation of time and price. It's aligning with this bench, so this would be a legitimate target for it to tag. Time and price will find a way to come together. And by the way, you're trading above all three of them, right? And you're looking over your shoulder for that retrace. And maybe we're getting it. We're going to find out in 8.5 minutes. But this is just, we do this every week, right? Doesn't matter what we look at. Here's that 4 hour Bitcoin chart. Now you've pulled right back to the T line. Like, this is something that we spoke about before. Do you find support here on the T line and bounce and take out this high, or this previous wave's high? Or do you fade it, fall into this gap, look for the upper value range, and then come back and test the 20? We don't have a sell signal yet, but I'm sure on the 1 hour we do, right? On the shorter time frames for sure. We've got a couple of them. And if you would have got washed out in here, that's the price you pay. You know, whether it was stopped out or you got triggered out, that's okay. You just re-enter. And why do you feel confident doing that? Because, and we showed this before, if you were to get washed out up here, maybe you got stopped out, you still have, instantly you can identify yet again of declining price patterns, right? Take away the candles and you'll take away a lot of your angst. You don't have to even see the candlesticks to know that price has fallen, because we have other means to tell us what kind of a move we're in. And these things here, look, any of these tests you get, this is just a green candle in a downtrend. Divergence is heavy, is all you did was wick the T line and you ran away. This thing wicked, went through, but where did it close? Way down here. Another wick attempt on the current candle with 6 minutes left. Probably looking for the 50 if it doesn't catch a bid. Right? The only thing that's going to change price's direction is money, either up or down. That's it. So all this daily news that we get, and when I say daily, I mean like several times a day, whether it be from the White House or the news that you watch, it's constant, right? And price will react to it, but we don't necessarily, doesn't necessarily break a trend, right? Price can be moving higher, you get bad news and it crushes, everybody dumps. But the chart will tell us whether or not it's going to hold if you're in that. The chart will always tell you. Try to avoid the crazy news days, or at least trading in and around them because of the volatility. But once the market makes up its mind and it gives you a signal that, hey, you know what, it's time to go for a run, you just wait. The hardest part is waiting for your moment. Right? Waiting for your moment shouldn't be difficult. And when I say that, like, here's a 1 minute chart. I don't think you should be uncomfortable waiting for the appropriate signal entry on a 1 minute chart. It's 60 seconds out of the rest of your life. I think you can handle it. Or if it's 5 minutes or 15 minutes, you can handle it. Wait for your setup. Just wait for your setup. This is why, like, look at the power the 50 has on it right now. Any time frame, any asset. First touch of the 50 on this 5 minute. Yep. What happened? Price faded. Went back, got some flowers, some chocolate, made another attempt. Got the door slammed. Went back, flowers and chocolate, got the door slammed. David Elliott would be so happy that I'm using his flowers and chocolate thing. But like, this is, and what's the resistance in here? Well, now you can see it with your own eyes, right? You got the 20-day moving average and the 50-day moving average on the 5 minute time frame. That's what's given price grief. Yeah, is it a little more rastered in because it's a 5 minute chart? Yeah, sure. But how price is reacting to support and resistance levels and how it's behaving as far as if it's failing, you think it's going to roll over and take out this wave's low? Absolutely. That's how this goes. And once it takes this one, it's going to look for this one. And if it takes this one, it'll look for this one. And the only thing that will change that is money. And lots of it. That's what moves these things up or down. We just have the ability to read and interpret what that money is doing. That's our edge. Right? Any time frame, any asset. That's our edge. If you want to know where price is going on the right side of the chart, look to the left. It's all there. You just have to learn to, and when I say learn, it's not that you can't, it just takes time to trust your charts. Right? When you see these things unfolding in real time, you're like, oh my goodness, I can't believe this is, I can't believe this is happening. Should I actually take this one? Should I take this trade? And by the time you figure it out, you may have already missed it. Right? That's what's great about, using signals based on methodology. Right? They're typically quite reliable, and they offer you a way to mitigate the risk as well. Right? So it doesn't matter what's going on in the world. It's going to be crazy on any given day. Some days are going to be more crazy than others. And when that happens, you have to rely on your charts. It's not an accident that when markets get crazy, especially during sell-offs, that the people at Bloomberg and all the other business news, they bring out their technicians to try and explain to the world what's going on. The problem is they only do that when it's raining. And if people would take the time, like you guys are right now, to learn how to read price on a chart, to understand that it's a language, and all you have to do is interpret that language and follow the money. Literally just follow. You can probably do it better than most. Mitigate the risk, back the lev down, and all that kind of stuff, and you'll be just fine. Just do what you're told. But yeah, if there's not anything else this week, then or today, we'll end this one now, and we'll pick up on Thursday, and I'm sure we'll have a better idea of what the world looks like, and we'll be able to come back and see what actually did happen, right? Where did price go? Did it break down? Did it find this level to the upside? Did it find the level to the downside? We'll be able to track it, right? We just track price on any time frame, trap it in a range, which you can do with your volume profile or major moving averages, and trade in and out of them using and understanding first touch approach, and all that, you'll be just fine. So we will see everybody on Thursday if you don't have any questions.
Nah. See you on Thursday, my man.
You bet, guys. Take care, everybody. And yeah, don't forget to check out smartdefi.com and the BYDFi exchange. The link is in the advert that we see on Twitter, or X, I should say, and it's also in the description on my YouTube page at Blunthouse TA. So we can get you on BYDFi. It's a super slick exchange. You're going to like it. And we will see you guys on Thursday. Take care, everybody.